Ticker symbol O, or Realty Income Corporation, has been a substantial part of my long-term dividend growth portfolio ever since I started investing around 7 or 8 years ago. And over the years, I've purchased so much Realty Income to the point that as of right now, I'm currently holding somewhere of around 2,848 shares of ticker symbol O. And although I'm clearly a big fan of Realty Income as a long-term buy and hold investment, just to be fair, in this video we're going to criticize Realty Income and talk about some of the negatives, some of the worrisome matters that Realty Income offers in 2024. So if you hold any shares of Realty Income or ever plan on it, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first thing that I think is sort of worrisome when it comes to Realty Income or real estate investment trusts across the market at that is the fact that owning real estate or having exposure to real estate investment trusts, in this case, is very tied to interest rates and if or if not the Fed is going to raise or lower interest rates from here. Now what I mean by that is basically ever since the Federal Reserve has raised interest rates to the point that they have as of right now, real estate investment trusts, and of course Realty Income included, has slowly for the most part been selling off because the potential profits for real estate investment trusts are very closely tied to the price of debt. And this is because commercial real estate relies on debt to play an offense and to service their properties. So in a sense, if you are going to invest in real estate investment trusts, or of course Realty Income for this matter, you are sort of relying on the fact that the Federal Reserve is going to keep interest rates somewhat steady and hopefully low, so that the real estate investment trust you're holding on to is going to be able to perform business like usual and obtain debt for properties as cheap as possible. Now I will say that sometime this year, I do believe that the Federal Reserve is going to lower interest rates, and I think that REITs, just like Realty Income, especially high quality ones, will be back off to the races. But what if the Federal Reserve doesn't cut interest rates as fast as some investors would like? Well, that is a risk that real estate investment trusts are going to be facing spot on. Another negative or something else to sort of be worried about when it comes to Realty Income, and I say sort of because honestly I'm not all that worried about this, but just for argument's sake, the fact that Realty Income does own around 15,450 commercial properties does make this REIT very highly diversified. But even though Realty Income is quite diversified, there are a top 20 client list, and some of the names on this list are very, very worrisome. Now there's names on this list that I personally am not worried about whatsoever. Things like Walmart, Sam's Club, things like FedEx, or even 7-Eleven. But there are other names within the top 20 clients for Realty Income that I personally am a little bit worried about. Names like Dollar General or even names like Walgreens, considering all the craziness that Walgreens alone has been going through in the last year or so. Now with that, the silver lining is that of course Realty Income is very diversified, and the fact that Walgreens only makes up 3.4% of the overall portfolio does mean that because of diversification, Realty Income has not placed all their eggs in one basket. So even if Walgreens does close some stores, or even if Dollar General is forced to do the same, the overall portfolio is not going to be affected all that much, considering once again there's 15,000 plus commercial properties. But still, just to be critical on the top 20 client diversification list, if we were to be real here, there are names for the most part on here that are pretty recession proof, meaning that even if the economy, even if some craziness happens, the majority of these names will most likely still be able to pay rent to Realty Income moving forward. But there are some names in here that are worrisome, names like AMC, names like Red Lobster, or even some of the gaming like MGM or Wynn Resorts, that although are performing okay today as of this moment, the future outlook could be potentially sort of grim. So if I were to be completely honest, the top 20 clients of Realty Income, although Realty Income's portfolio is highly diversified, which is one of the reasons why I'm so okay with investing so heavily in this REIT, there are definitely certain names on this list that I'm not exactly thrilled about. Now the last negative, or something to sort of be a little bit worried about potentially about Realty Income, ticker symbol O, and this is especially important for the dividend-focused, income-focused investors out there. Even though Realty Income has consistently paid out dividends for years and years and years now on time, Realty Income's dividend growth rate is relatively slow, meaning that Realty Income does not pay all that much more in dividends prior to the previous year. Now for example, in 2024, Realty Income is paying just around 26 cents per share per month. But if we were to go back 10 years ago, if you were to hold on to Realty Income for 10 whole years, back then you were getting paid around 18 cents per share per month. Now 18 cents to 26 cents per share, that's roughly an 8-cent increase over the past decade. Now, although that is dividend growth, and again, as an investor, I'm not necessarily angry about it, the fact that the dividend growth has been relatively slow, and seems like at this point, it could continue to stay on that rate. This is definitely going to be worrisome for investors, especially like myself, that want our dividend income to not only keep up with inflation, but hopefully surpass it very quickly. So the fact that Realty Income's dividend growth rate over the last year is around 3%, the last 5 years around 3%, and if we zoom all the way out, there were some bigger years, so zooming out 20 years, it is 5%. With inflation being anywhere from around 2 to 4% on a yearly basis, the dividend growth that Realty Income offers is not necessarily going to keep up. Now, that being said, Realty Income does have a starting yield of almost 6%. So even if you're getting a 6% start with around a 3 or 4% increase year after year, I'm by no means saying that that's horrible, and the fact that Realty Income's dividend is very relatively safe, with stats like 55 years of dividends without a reduction, and of course 29 years of consecutive increases. I am by no means hating on Realty Income's dividend, but I am saying, just to play devil's advocate, that Realty Income's dividend could grow a tad bit faster, just to make sure that if nothing else, we're surpassing inflation and then some. Now, I say all this to say that I still think Realty Income for a long-term buy and hold investment is going to be wonderful when we look back in a few years. Realty Income has exposure to some of the most recession-proof industries, which means that even in the next 12 months, if we do go through a mild or even moderate recession, I think Realty Income's clients for the most part will be just fine. And the reason I say that is because, of course, I do have data to prove that. Over multiple different recessions and crazy market turmoil, since 1992, Realty Income's occupancy has barely even budged, down maybe a percentage or two during the most rough times in the economy, but overall, Realty Income's portfolio has remained occupied and the rent checks have continued to be sent in. Realty Income is not the small little baby REIT it was even a few years back. And there's honestly some pros and cons to that. I would say one of the pros are the fact that it's even more diversified, which makes it more of a sleep well at night REIT, in my opinion. But one of the cons is that Realty Income might be almost too big for its own good now, which means that there could potentially be less growth opportunity compared to those that bought into Realty Income, say, 5 or 10 years ago. And with Realty Income currently trading where it is in the low $50 range, I still think Realty Income is a buy and hold opportunity, which is why, as of right now, I'm still grabbing a share here and there, even though I'm almost up to 2,900 shares of ticker symbol O. But even with a great stock like Realty Income, there are some negatives that come along with it, which is why I want to make this video just to be fully transparent on some of my thoughts when it comes to Realty Income. But lastly, now I want to hear from you guys down below. When it comes to Realty Income ticker symbol O, what is the number one most worrisome aspect about the monthly paying dividend stock if you were to have to choose one? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.